Do you want more money? How about more money for basically doing nothing? Want to know about stocks that keep giving their investors more money? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel, and I'd really appreciate it. Dividend growth investing is a fantastic long-term investment strategy. One of the most fantastic and powerful aspects of the strategy is right in its name. Dividend growth. That's right. It isn't dividend investing, it's dividend growth investing. Dividend increases that compound away into ever higher dividends, all while you do nothing other than hold stock. It's like magic, guys. So while a lot of high yield stocks that don't increase their dividends, or worse yet, cut their dividends, tend to perform rather poorly over the long run, high quality dividend growth stocks tend to perform incredibly well over the long run. And the increase in your passive income from those dividend increases allows you to keep up with or even exceed inflation. That's the best of both worlds. Today, I want to tell you about 3 dividend growth stocks that just increased their dividends. Ready? Let's dig in. The first dividend increase you should know about came courtesy of ALTRIA Group Inc., stock ticker MO. ALTRIA just increased their dividend by 4.7%. Stock ticker MO should stand for Mo, as in Mo money. You've gotta love this. While this wasn't a life-changing dividend increase or anything like that, it's still nearly 5% more passive income for doing nothing other than continuing to hold shares. That's so easy, even I can do it. This marks the 52nd consecutive year of dividend increases for the tobacco company. More than 50 straight years of not just paying a dividend, but paying an ever-increasing dividend. It doesn't get much more consistent than that. The dividend increase was off of the 10-year dividend growth rate of 9.1%, but consider that the stock yields 7.2%. You just don't need huge dividend raises when you're already getting that kind of yield. And with the dividend only accounting for 78.4% of this year's midpoint guidance for adjusted earnings per share, this dividend is covered, which justifies the increase. The stock has moved up more than 20% this year, but it still looks cheap to me. Take that monstrous yield for example. The stock's 5-year average yield is 5.6%. We're 160 basis points over that. And based on the midpoint for this year's adjusted earnings per share, the forward price earnings ratio is under 11. There's nothing expensive about this stock. The next dividend increase I've got to tell you about came from Lam Research Corporation, stock ticker LRCX. Lam Research just increased their dividend by 15.4%. Isn't it beautiful? Almost 16% more passive dividend income. Almost as easy as snapping your fingers. That's how it is for shareholders. And this is a great example of why I love being a dividend growth investor. The fabrication equipment company has increased its dividend for 8 consecutive years. Another double-digit dividend increase from Lam. What's new? This follows up last year's 13% dividend increase. Their 5-year dividend growth rate is 37.7%. Really impressive stuff. And you want double-digit dividend growth here because the stock only yields 1%. With a payout ratio of 22.3%, you can bet that plenty more of those double-digit dividend increases are coming. The stock is up nearly 30% this year, and I'd argue the valuation has become stretched. Pretty much every basic valuation metric is running ahead of its respective recent historical average. The price to cash flow ratio, for instance, at 24.6 is way over its 5-year average of 17.1. Personally, I'd want to see a pullback in this name, but if you get a pullback, make sure to have it on your radar. This is a fantastic long-term performer. The stock is up 550% over the last 5 years alone. That's dividend growth investing for you. Third up is the dividend increase that was announced by WILLIAMS-SONOMA Inc., stock ticker WSM. Williams-Sonoma just increased their dividend by 20.3%. Has your jaw dropped? Well, be prepared to be totally floored As if this 20% plus dividend increase wasn't impressive enough, this is their second dividend increase this year. This follows up an 11.3% dividend increase in March. Oh, and let's not forget that they increased the dividend by 10.4% last October. All in, we're talking about a dividend that's currently 47.9% higher than it was this time last year. This is the 16th consecutive year of dividend increases for the home products and furnishings retailer. Williams-Sonoma might be known by consumers for their high-end home furnishings, but they should be known by dividend growth investors for their high-end dividend growth. Their 10-year dividend growth rate is 13.6%, which is already solid. However, there's been a real acceleration in dividend growth of late. The stock only yields 1.5%, but investors only looking at yield are totally missing the forest for the trees. With a low payout ratio of 26.7%, I suspect this party is just getting started. This stock is up 111% over the last year, but don't let that scare you away. The thing is, the business has performed so strongly that it justifies a lot of the stock's move. In my view, this is a case where the stock started off wildly undervalued, then you combine that with a business that suddenly goes gangbusters. It's like a coiled spring that suddenly and violently uncoils. The price cash flow ratio is currently at 9.5. That's only slightly ahead of its 5-year average of 8.9. I wouldn't say the stock is cheap, but it doesn't look wildly overvalued either. I've highlighted the stock here on the channel repeatedly over the last year, yet a lot of commenters have said the stock was way overvalued. They were wrong then, and I'd say they're wrong now. If this name isn't already on your radar, I'd consider changing that. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about these dividend increases. Please make sure to subscribe to the channel and ring that notification bell so you don't miss out on new content. Also, take a look at the description box below for some important links, including the link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.